Prosus, the Dutch investment arm of South Africa's Naspers internet group, focusing on future growth on food delivery service, fintech payments, and edtech. Now, with an estimated $5.5 billion in net cash as of September 2021, Prosus is continuing to explore M&A opportunities after its failed bids for Just Eat and eBay's classified ads business. Well, we're joined by Bob van Dijk. He is the Chief Executive Officer of Prosus. Bob, so good to see you here in the studio. Usually we have to do this remote.
What a joy.
So what a joy. I have so many questions to ask you. First, about inflation. I mean, what does it mean for, the businesses that you're trying to run, but also venture capital, interest in your kind of business? Does it change a lot?
Actually, I think in the day-to-day business, we are a consumer business, right? And typically, inflation does change things over time, and prices will go up, but there's no doubt about it. But the fundamentals of our consumer business are really sound, and I don't think will be disturbed. I think in the investment side of the house, it's different, right? Rising interest rates matter tremendously for valuations, and we see already a tremendous amount of turmoil in the market, and we don't know where it's going to end. The flip side of that is that when there's a lot of volatility, there's opportunity. Yeah,
but when do you think it will end, though? And what kind of opportunities does it crop up for you?
It's an excellent question. I would say I would be surprised if we've seen the end of turbulence in the markets. Yeah. I think there's been strong reaction. I think there's definitely been overreactions, but the markets don't seem to be calm right now. So we'll see what happens.
Does that make actually your life that much more difficult? I know you're also looking at potential M&A.
So I would say we're a long-term investor, right? We typically think about the world a decade or 2 decades out. So the madness of today matters relatively little. But we do want to make sure we invest diligently, right? So we're very careful about allocating our capital. And when there's times of turmoil, we have to be careful not to be caught at the wrong side of a deal.
So, Bob, where do you want to be invested in the most? If you look at food delivery service, and it kind of goes back to inflation, I mean, how difficult is it to model, first of all, what we consume in food delivery post-pandemic, how that will change, but also inflationary pressures, if they stay for a long time, then it changes the numbers that you're looking at.
It does change the numbers tremendously. I think you're absolutely right there. What we've seen, though, is that food delivery in particular has been a business that grows much faster than average economies, and it has actually relatively little to do with sort of what is the normal development pace of the economy. It's growing much faster. Adoption rates have jumped up during the pandemic, and have actually stayed up. So I think we had explosive growth for a number of years where people were locked up in their homes. But even after, people developed these habits that actually really work for them. So we've seen continued really strong growth in our business, and we're big believers. I think actually if you look at the markets are a bit nervous about the model. What we see on the ground gives us a lot of confidence.
Talk to me a little bit about car dealerships. I mean, I love talking to you because you really give us a snapshot. I feel like I talk about the markets and the economy every day, but it's really distilled in what you guys do. So, what does it mean for how we consume, for example, in car dealerships and things like that?
So the car supply chain has been seriously disrupted, right? First we had a chips issue. Now there's broader issues around. Well, there was a boat on fire this morning, I think, with 4,000 vehicles.
4,000 VWs.
It's so I think what we have seen is that there's 2 things that happen when people have little access to new vehicles. Actually, the second-hand vehicle trade has picked up in terms of values, and that's where we do a lot of our business. So it's actually been we've been doing good business, getting people a vehicle when the new vehicles are not around. So I think we've been investing in these businesses for a decade, and now it's been a moment when they've been essential for people's ability to find transportation, and we've seen the numbers grow very quickly.
But does it last for the next couple of years? And this is really the question that underpins everything. I mean, we talk about central banks, but it's a very simple and difficult equation. It's when do these supply chains ease off a little bit?
Yeah, to some extent, I think if you're in the new vehicle business, these swings are incredibly important to your bottom line and to your volumes. For us, we basically keep people moving. So I don't think there's a big change in the amount of distance that people travel, for example, right? That hasn't really changed so much. So the fluctuations in the new car market in the end are much more dampened when it comes to people just finding a way to get around. And we're in the business of finding a way to get people around.
Bob, how frustrated are you by some of your valuations? So I don't know if you look at some of your biggest rivals, maybe Tencent, and I know this is something that you've been focusing on, trying to spin off businesses also, so that people actually know what they're looking at, buying into as shareholders, and you make the most of it.
So frustrated I'm not, because I've been doing this for a while, and I keep smiling. I think there's two things that matter for us. So first, as I said earlier, we're long term, right? Yep. So the madness of the day, we try to look through and do things that create value for the long term. We're careful investors that think long term. So in that sense, it doesn't matter that much. On the other hand, I think particularly when markets overreact, and I'd venture to say that in a number of cases, particularly around food delivery, I think markets are overreacting. It's an opportunity, right? So we see value over long term, and if markets get nervous, it actually creates opportunities for us.
But have you had discussions with shareholders that say, actually, why don't you spin off more so that I know that I'm buying a food delivery service instead of some of the car dealership? That, you know, the model of conglomerates just make it much more difficult to value, and maybe it's also because, you know, shareholders are maybe less sophisticated than 20 years ago. I don't know whether you feel that.
So the way we think about it is the following. In the past, we've actually thought really careful about our portfolio, and when there are moments when we think the business are better off being owned directly by shareholders, we've done so. Actually, our TV business is a great example. We're sitting in a TV studio here. We used to own many of them. But at some point, that business was so different from our core, and we believe it was better for shareholders to own those businesses directly. I think that will happen in the future as well. On the other hand, actually, I think food delivery is an excellent example where I think we have a much more fundamental view, and we actually can invest through a cycle and build a great business for the long term that shareholders will be very happy with. So it's that balance.
Right.
I think in some cases it's absolutely right to do that, and we will. In other cases, actually our long-term nature can be really helpful in building a valuable business over time.
Do you feel like you need to actually, if not exit or dilute some of the investments in South Africa?
So South Africa, we used to have a very big portfolio, primarily in TV and in media. I think now we're much more focused. And the business we have there, we're actually really proud of, and are really tomorrow's businesses. So we have a media business that actually is doing more and more TV and is also doing a lot of online news. And as you know, that's a great business. The business
it is a great business.
It's the business you're in, and it's doing remarkably well given the economic circumstances that are tough.
Yeah.
And we have a basically business like Amazon has here, and it's called Take A Lot, and it's doing really well. And it's actually getting people things that they were struggling to find in the pandemic, and it's been a lifeline for many customers.
But what's the biggest, and actually thank you to all the viewers, because it is a good business, and we're so grateful that people watch us every day online and on TV. But Bob, overall, when you look at the food delivery business, what's the biggest challenge? So I don't know, you know, the barrier to entry, whether that changes, because actually I want to buy at a restaurant or I want to buy at a grocery store. I don't really care that much who delivers it, unless there's, you know, an advantage in terms of a plan or anything like that. But it's also, you know, about climate change. It's again about price increases in terms of inflation. So what's the biggest challenge?
So I think operationally there are lots of challenges, and I think you named them really well. I think strategically, what we see is that people have less time, they want more convenience, and they're leading pretty hectic lives in which sort of somebody taking part of that sort of daily hassle away from you is very valuable. People are embracing it more and more over time, and that trend's been, I think, very steady for 5 years, and that got us into investing in the business before, and I don't see that trend stopping at all. And within that, there are lots of operational things that need to be dealt with. You also want to make sure that it's sustainable, you pay people properly, they're safe, and we're very focused on delivering customers what they want, but also making sure that the people who deliver that have a good life and it all works out. So lots of operational challenges, but people in the end want more convenience, and I think we can do that.